Okay, well, we're live. Coach Paul, I'll let you lead this,
Well,
and then we could go back and forth.
all right. Well, welcome back to At the Buzzer, the segment where we review today's welcome action. And we have in the 35 different markets. We won't cover all of them. We'll cover the main and ask some questions to see what other markets you might want to review. Um, Exciting day here. We have the man, the myth, and the legend, Coach Dakota. Welcome, Coach
Um,
Dakota.
thanks, thanks, Coach Paul. First time being on at the buzzer. Usually, I'm not looking or thinking about the markets right now. This is usually when we have a lot of the earnings come out. I usually wait until after, and the markets open up again until I even pay attention to earnings. I've had some very bad experiences thinking I could trade at this time, but I'm like, yeah, I'm expecting these earnings to be positive or this or that, and I've lost a decent amount of money in my personal accounts trying to do these earnings plays based off of directly correlated with futures. So I know this is your show, Coach Paul, and this is what you're used to. So I'll go ahead. I'll let you lead this. I've learned a lot from you. I've
Oh,
been, if you believe that, I really have. Just so everybody knows, I have been a coach here for Topstep for almost 2 years now. It's time goes by so fast, and I've always watched Coach Paul, Coach Ray, and Vince, and Jack, and every single coach that comes through here and is at Topstep. I just watch. I've enjoyed it. It's a different perspective. I think that's one of the things that I don't want to say it separates me from others, but I know I'm not the best trader ever. And I know there's always things to be learning in these markets. If you guys tuned in to Fast Markets earlier today, you've seen that Baron and I kept going back and forth. We might have different opposing opinions on different subjects, but I'm always learning, and Baron's always learning. Everybody should always be learning. So it's a pleasure to be on here with you, Coach Paul. Take it away. I have my charts open, but any market that you want me to look at, I'll switch it over.
okay. Well, it's great to have you, and I'm going to throw it out. You are the Goda, but Coach used to be with us when we were on Discord. When we first started Discord, you used to come on regularly, and then you started Slow Markets, where you've become Coach Dakota, and you do a great job. You know what? I just have to throw it out here. We talk, about other coaches, and we learn from each other, and we get inspiration from other coaches. Because you probably all know in the audience, coaching, I mean, trading is hard. You go through a lot. And what I really appreciate about Coach Dakota, and it helps me, is his focus is on profit, oh, excuse me, process over profit, and he puts it out there, and it's not easy, and the good, the bad, the ugly, and I really appreciate and it encourages me what you do. So let's go forward and begin today. Let me find my charts worth
Yeah, thanks,
the
Paul.
top movers.
You tell me the market. I'll pull it up on here, and we can talk about anything you want. Like I said, I'm just excited to be on here. This is our first segment on together for a very long time, and yeah, putting it. And we briefly talked about it in the green room before coming on air. While you're pulling up your charts, just let me know. Sometimes being in front of everybody, being in the public's eye, showing everything, transparency, it has its downside. It's like a lot of times I question myself. I'm like, do I really want to just show everybody everything? because even though I'm focused on the process and I'm sizing down, and I lost $80,000 from my high watermark after making half a million over the past year and a half, and that's not what the public sees, right? The negative feedback from the common saying on social media, don't look at the comment section. Sometimes it gets to you. I've learned to go past that. Coach Jay and everybody else on Topstep TV, it's like, yeah, we need to just dig past this. There's going to be internet trolls from who knows around the world. Just come in and make some negative comment that you don't even know if they're even 12 years old or who knows. And then get past that aspect and realize that there's such a bigger trader base, and there's so many more traders that just watch and tune in to At the Buzzer who they don't even comment, and they learn, they listen, they're seeing these markets for the first time. I remember the first time I discovered futures markets, and discovered when I was working, listening to you and Vince and Ray and Jack, and everyone's like, yeah, I trade corn, or I look at this. I'm like, I've never even thought about that market. It's like I know it exists, but I didn't know anybody even trades it. And discovering some of these new markets and the opportunities that there are here at Topstep, and just in futures trading in general, has been really eye-opening to me. I haven't dabbled in everything. I've implemented gold futures in my trading a little bit more. I traded Forex or currency futures now here at Topstep, but it's nice to see these different perspectives and all these different markets.
Well, that's great to hear. And we can go into gold too. What's our biggest movers on the day?
Okay.
On the upside, platinum, which we've covered a bit,
Okay,
was
let's
up.
take a look at
Yeah, bring it up. I
platinum.
can't see your chart.
Oh, yeah, let me share my stuff with you, but here. Okay, you should be able to see my
There it
chart now.
is. Yeah.
Yep. There's the platinum. This is an hourly chart, and wow. Yeah, this was a big one today. That's almost 4 3/4 from bottom to top.
Yeah. Finished 3.5% higher. And we'll review that. The other one was crude. Was up 1.85% today.
Okay, yeah, I see that.
And the third was hogs, live hogs, up 1.5%.
Hogs. Is that HE? Is that lean hogs?
HE, yeah,
Okay.
you got it.
Okay.
On the downside, the biggest percentage loser was wheat, was down 1.3%.
All right, let's take a look at this. Okay. I've never looked at a wheat chart, to be honest, Coach Paul.
I don't trade it. I used to. I grew up in the green room at the Board of Trade, and then I was blessed to learn from veterans who, if you're willing to listen, especially as a youngin.
This
Yeah,
is per bushel, 534.
yes. It was down 7.25%.
Okay.
Excuse me, 7.25 cents. So it was down 1.3%.
Got
Which
it.
is a decent move in wheat. Wheat, by the way, is a grass. So an old friend of mine from ADM, older trader from Kansas, and he used to go, "Don't trade wheat. It's grass. It grows all the time around the world." Probably because he had trouble trading wheat, but it's not a bad contract.
No,
Um,
it's decent size at the bid and ask, and decent amount of volume traded in a day. So,
Yeah, usually it's when it goes back. It's goes to the mean. It doesn't trend well. Like I said, because it's always being grown. It's grass. So the second biggest downside was corn. December corn down
Okay.
0.75%.
Down 7.
And
426.
yeah.
Okay, there's corn.
And natural gas, one of our favorites here, down 0.68%.
Down 0.68%. Okay.
So most of the big moves today were on the upside in most markets here. So let's start with one of your favorites, and net, NASDAQ.
Okay, okay, we could go
Yeah.
there. We could, we could go to the NASDAQ. Do you watch the NASDAQ very often?
All day. I watch it a lot. I don't trade it all that. It has to be. See, I trade a bunch of different markets, small,
Okay.
and when I trade the Nasdaq, it's got to be really set up. But I've been trading a lot of Russell, um, and the mini S&Ps. But Nasdaq, I will trade it. I watch it. I keep, but I really like the S&P more than the Nasdaq. Um, which you got to trade what fits you.
Hmm.
S&P I've been trading for since it started, the futures, not the index, not the
Oh
index.
wow. Okay.
But I just it's to me it's smoother. But you want to? I mean, I'll bring it to you. Do you trade the S&P also, don't you, or
I've
just
looked at
Nasdaq?
it. I've watched it. I I enjoy the Nasdaq. I don't know why that is. I trade slow markets, and then the S&P is just too slow at that time. I
Hmm.
I get a little bit more movement during the Asian session, overnight session in the Nasdaq than I do the ES. It doesn't mean it's not bad. A lot of times I'll look back on a day and say, "Hey, this barely hit my stop loss when ES wouldn't have even came close." ES respects support and resistance maybe a little bit better. Nasdaq, because it has such a thin order book, it's more whipsaw, so it tends to run those stops a little bit easier, and it's not as consistent. I mean, each one has its ups and downs. I like the Nasdaq because of the volatility, and it's just something I'm used to is all. And
Hmm.
to be honest, a lot of times I think to myself after I have these struggling times, I'm like, I probably should just be trading the ES. It's a little more consistent. Sometimes if it just hits my stop loss and rallies up, like if I was in the ES, it's that. And so I do tell traders who are new that ask me, what market should I trade? I direct them towards the ES.
Oh, interesting. To learn.
Correct. Yeah, I think the ES. I hate using the word easier, but the ES is more beginner friendly. I don't know if that's the right way to say it either, but it's a
Yeah.
lot less chaotic compared to the Nasdaq.
Well, as Courtney says, it has its ups and downs, literally. Thank you, Courtney. So let's go through and if you would, I like that you have a process and you preach that and you follow it. And I, it, to me, that is the core of success is following a process. If not, you're getting caught in a maelstrom of emotions. So even in the drawdowns, you stick to it. So today, could you show with Nasdaq? Can you trade Nasdaq? Can you show some things you traded today
Yeah,
as
yeah,
part of your process?
yeah, I can. Sometimes I stick to it for the better or for worse, because sometimes if you're struggling and you keep struggling and you keep doing the same thing over again, that's the definition of what insanity. And then sometimes it takes me a little bit longer to adjust. And now with the power of hindsight and kind of zoomed out, I like this hourly chart. And I mean, it's just been in such a bullish trend. I had two trades today during the New York session. One was a great trade. I reviewed it, I liked it, and I'll take it again. The second one, it was stupid. I should have never taken that trade. And only after the fact, after I watched and said, you know what, that was dumb. I should have never done that. How can I not do that again? Even though I was following my process, here's why I shouldn't have taken that trade. But this is an hourly chart on the NASDAQ, and it's not a perfect channel, but we have it's a very clear directional market up and to the right. It's been buy the dip every time we've had a sell off. This market has been holding these higher lows, equal lows or higher lows, and it was the same story. It was the same story once again. We ended up holding these 23,000s. And then as we start to zoom in into what happened today, what happened this morning, we could see that this was the all-time high, and we've been making all-time highs quite frequently. But the way I was looking at this was, I mean, we barcoded, we had a range bound here on July 15th, and this was a nice level of support and resistance. It also became a nice level of support and resistance on July 16th. And then again today, it was acting as a nice level of support and resistance. And we seen that in the New York session. We got down to these 070s, ran some stops, and then it was just straight up from there. My very first trade today, it was based off this nice resistance. The top end of that range of July 15th, it was also some major resistance on the 14th. So there was a lot of consolidation here. And there was a reason for me to get into a short. I missed those longs, and longs was obviously easier to trade today. But I got into a short at 170, and it was 50 points. It was a great trade. But then as soon as we started breaking out, I should have just been hands off or changed my bias. I was hard headed, and I made that mistake. And sometimes only after the fact, and then you take a look and say, hey, keeping it very, very simple and looking at it from like at the buzzer after the day's done, and you look at it, you're like, oh dang, that was a mistake. This was easy. That was this. And then you go through it and realize what's what. And we're continuing to make all-time highs, even though if it's not like we're breaking out and blowing through all-time highs. It's kind of a consistent grind up higher. So that was my trading today in the New York session here in the NASDAQ. The power of hindsight is just amazing.
Do you keep a journal?
I I used to, Coach Paul, and ever since I've been doing this on YouTube, I've enjoyed having YouTube be my journal because now I have the luxury to replay everything. I could go through and watch the market. I could watch my reaction. I could watch and listen to what I was saying at the time, what I was looking at. And then right now, if I went back and I watched fast markets, I can see the mistakes I made in real time. And so that's been very helpful for me to go back and review these sessions because I'm trading live in front of everybody. And since I'm not doing what a lot of the others are doing on social media, where they'll switch accounts or hide this or hide that, and I'm just showing these executions and talking about it, it's easier for me to go back and review since I don't have to worry about whether or not I switched account or what account that was taken in. It's easier for me to see what my mistakes are.
Well, you're always reviewing and one of the things that I really enjoy doing this section is as you review and you follow a process. To me, it makes the decision making easier. I just I if you don't have a process, how do we know our entry and exit and consistently? So you've done extremely well. So I would ask you, I mean, for our audience, emotionally, how do you stay? Because you're a very stable, emotional person. Is it? Did you develop that, or are you just naturally that way?
Um, it was learned, Coach Paul. I was not.
That's
Yeah,
good.
yeah. I was never a wild person. I've never been into parties or drinking or any of that. It was something that was just built into me from since I was a kid. Yeah, growing up from very humble and yeah, I don't want to get too far into it, but it's something that I learned, and then being just going through the ringer over and over and over again in different aspects of life and then in trading and learning the hard way is just, you learn, and these markets humble you, life humbles you, and it gets to a point to where it's like no matter how good I feel about a trade or I just won a trade, you know that the next one could be a bad trade. You've learned through that. I've blown through a lot of money. um, I have a lot of ups and downs. You probably know as much as anybody else, Coach Paul, on the daily P&L swings of maybe some longer term investment accounts that with bigger size, right? Where what we're doing here, day trading, when someone's like, "Yeah, I'm down $500. I just lost $1,000 on that trade. I'm down $1,000 today." And putting that in perspective of some of these bigger accounts on the longer perspective, and being able to handle some of the intraday drawdown, especially that we've seen earlier this year when we're seeing like a negative 5% day, negative 5% on a $5 million account. That's a pretty big drawdown on a single day. And then you compare that to what we're doing on here. You're like, does it mean something? Yes. For me, it's more about the process, but then getting emotional over it, it's a disconnection from the dollar amounts, I think.
Well, one of the things that helps in that, and why I like to bring that up is uh, Ray Dalio calls it struggling well. And when we struggle well, we learn from our mistakes or our travails. When you struggle bad, you're just not going to improve. So, um, and yeah, I've had those struggles and big drawdowns and blown accounts, and I can be stubborn too. What I ended up doing is I'm just stubborn following my process.
Mm.
And I turned that stubbornness into something that would help me um, because um, I didn't know how to be wrong. You know, it was like I'm just hold on till I'm right. So I love to hear that, and I love the way you share that with your audience because if you're learning out there, you know, if you when you first come in it, your mindset is I'm just going to get right and make big money in a hurry, and that rarely happens that way. So I'm glad you share that, and um, keep doing it. So hey, let's bring up the daily in the Nasdaq.
Yeah, I was going to talk about that one too.
Yes,
That's
go ahead.
important. Yeah, right there. I don't know how much you want to see of it, but
Yeah, that's well. We've been watching this. Um, I'll have my charts tomorrow.
mhm.
This market is over the 20, the 50, and we've been in this range for what about a week and a half.
Since the start of July. Yeah.
So when we were saying it, we were in that we need to close out. I mean, how many times we ticked or we went to all time highs and came back. I
Mhm.
mean, for a week and a half today, and like this is a breakout.
Today was, yes. That was,
Yes.
it's very clear and obvious now compared to, what was it? Just Monday too, where we rallied up to 23,200, and then we went right back in and tested the bottom end of the range. This one is clear. We closed above it, and I mean, that's a really great example of a breakout.
Yeah. It's a very clear example, and with a big body. And we closed at all-time highs, not just traded there. So that, to me, this is very healthy. It's got a good probability of continuing higher, and from the way I look at things.
Yeah, I agree. I mean, we're sitting at all-time highs right now. We're 8 points away as we speak. So this is as strong as it gets, which is still crazy to think because this is one of the bigger rallies I've seen in a very long time, coming off of in a 2-3 month period.
Yeah, well, I think it is the biggest of all time, if I'm not mistaken, percentage-wise.
I
Um,
I, I would believe it, and then
yeah.
to see the amount of momentum that we got today is just wow. We broke through it. And how do you go with trading this kind of a market? I
Um,
I, I struggle in it.
you just okay.
Other than just
Well,
close your eyes and buy it, I do options in this kind of market, which is a lot easier when it comes to the tools and flexibility I have. But when it comes to day trading this kind of market, when we just broke out of a consolidation area, we closed above all time, we closed at all time highs. What do you look for? Do you just wait for pullbacks?
yeah, buy the dips. Now, in a process which, in the last year, I've been focusing more on day trading. I'm naturally a better swing trader. Um, so when you day trading has to be precise. Plus, when you swing trade, you really like to hit home runs.
Mm,
Um, in day trading, as we've discussed on this show many times, I take 2-to-1 risk.
okay.
If I get 2 to my 1 risk, I just take it. Um, but tomorrow, after this rally, I'm gonna need a nice. I mean, I'm gonna watch the opening range breakout trade. So we'll go to Coach Jay's 3 minute, and we'll go through what it did today. Um, and we go through this regularly. So if you can open up the 3 minute chart.
Okay. Here in the NASDAQ.
Yep.
Okay, there's the 3 minute. Let me get it. And then you want me to go to the New York session opening range?
Yes.
All right, let's see if I could pull this up. This looks like, let me put there's the opening candlestick right there. That's the opening candlestick.
Okay. Now drop an anchored VWAP on that.
Okay, let's go. Anchored VWAP on
The opening
the
3 minute
opening.
candle.
There we
Yeah.
go.
So one of the things we look for, and I would look at this tomorrow. Um, we have the opening range. If you can highlight that,
The high and low of the first 3 minute candle.
yeah, the high and the low, yeah, frame that
Okay.
out.
There's the high, and then right there's the low.
Is that the 3 minute candle? Oh, that's not you.
Correct. Yeah. So I'll draw a box on it right there.
All right. So we had some selling coming into this, into the opening, but if the volume, and this is one of the things that I learned from Coach Jay, I always
Okay.
struggle with volume. Yeah,
As
Adele
do I.
trader. I'm not. I'm
As
not
do I.
insulted.
Yeah. I don't put volume on my charts. I some traders love it, and it's just not for technicals for me.
Yeah. So what one of the keys is using VWAP. It gives you an output of volume in a trend form, I like to call it. Now, the, the heaviest volume, I don't know exactly, over 90% of the time is going to come on the opening. It sets the tone. And when we see VWAP leave the opening 3 minutes, I harken back to my days in the trading pit. And here's the setup of why we watch that, and I really like this.
Is this
Is
what you're referring to, Coach Paul, where I circled when the VWAP breaks above the high?
yes,
Right? What I
yeah,
circled? Okay.
and what we get out of that, the volume, the highest volume, the buyers and the sellers come in the first couple minutes. Now we use a 3 minute. You could use a 1 minute. You could use a 5 minute. But the idea is this: if there is an imbalance out of the opening, and in the pit we used to have that, just to make it simple, all the orders that come in, the bigger traders known as locals, market makers, they would absorb a large percentage of the volume. And with that, they would find out what the quote unquote paper, what they were positioned in. What I mean by that is, if I take all the buyers and sellers and I get an imbalance and I see that I'm short a lot and there was large orders in that, and now I have some information. So let's just make it simple. Let's say I took these large locals took on all these orders and they're short 500. All right.
Okay.
Now, when it breaks out of that opening range, if it breaks lower and I'm the local and I'm short 500, I could press it because the paper or the public came in and an imbalance and they were long, and now I can push it because they were wrong. It's great information. Now keep pushing it until the paper comes back or you hit stops, and then you have really good information about what the public's at. Conversely, let's say I'm short 500 and paper comes in to buy more. Where am
Okay.
I at? I'm stuck. The paper's in. They've accumulated longs and they're buying more. There's an imbalance. And guess what? It's like playing poker. Guess who's got the imbalance?
Yeah.
Me. So at that point, they're not hanging around. And you can see it, you could hear it on a volume basis, like sound. But they're going to go in and they're not hanging around. They're going to get liquidity from the pit or anywhere they can to get to those 500 and maybe 500 more. But now they get in an opening range breakout where VWAP leaves the range early on. That's important information. There's an imbalance where the large, and when I say paper or larger orders came in, bought it, and they're not exiting. Or there's follow-up buying. That's what we call urgency. And we
Okay.
had that this morning. Not as much in NASDAQ. S&P was well defined.
Okay.
But once it does that, it's a high probability that the buying is going to continue. So if we look at the S&P,
Yeah, I'm gonna look at the ES. So I'm curious. I really am, because I seen the VWAP leave the Nasdaq, but it wasn't until a little bit later. But I mean, I'm looking at this chart right now. Before I put anything on there, it looks pretty clear to me, very defined and directional. There's the difference between the ES and the Nasdaq, where we watched the Nasdaq, the price action break below, the VWAP stayed in, and the VWAP
yes.
didn't come out until later. But then the ES was just straightforward.
Yes. So someone has to absorb that. Thinking someone or I don't, I think of it as the output. There was volume there, and it was bought on a red candle, right? So if the market was in a breakout to the low side, you would expect to see more volume, right, driving it lower.
Mm-hmm.
But the big hand came in and said, buy it. We don't know it at the point, but we start getting information because we never have. That's what we never have certainty. There's always new information. But this information, when it came in and VWAP leaves the range pretty early and aggressively, we have, and there are no certainties, right?
Right. Yeah. I wish there was.
Right?
Yeah, we wouldn't be here if there were.
So, but now we have information and we can start thinking in probabilities. When we have that kind of a function, there's a higher probability that it's going to continue because when we say urgency, not only that, there's that on the buy side we get that if it's really big volume and it's going higher, we have people that were stuck selling it, right?
Mm-hmm.
And there's nothing better than bad selling to drive a market higher.
Yep. Yep.
Because
Exactly.
yeah, if uh, we've been in that one, and that's where I think when I was younger, I would just freeze and go, "Well, I'll get out when it gets back." Has anybody ever done that?
Oh yeah. Oh yeah. Too often I've been there, done that. I had a picture of. Let me show you this, Coach Paul. I don't know if you
Please.
could see this, but where is it at? It was a good example. I had a good example last night on my gold trade. I don't know if you could see this, Coach Paul, but
Well, I don't see it.
let's
I
see.
just see the chart. Oh, there it is. All right.
Yeah, you can see that. That kind of describes a lot of traders where they get in a bad position and hope allows them to stay in it if they don't have any process. But that's kind of how the story of it goes. I mean, this was NASDAQ this morning where NASDAQ sold off to start the morning, broke below that opening range, and then it recovered. ES was just straight up. So there's that good
Yeah.
example of why I sometimes consider ES, and if you're new to trading, ES can be a lot better of a tool to learn from. And this is a good example too. It's clean. It's a lot cleaner than the NASDAQ.
Now, even with clean, it gives you information because it doesn't. I don't want to be a cherry pick. It doesn't always work this way. But when it
Correct.
is, you have a better um, probability that it's going to continue, and you can be a little more aggressive. Maybe you
Mm,
could put more on, or you can go to a shorter term, like you go to your 100 tick chart,
yeah.
and now because when you see a 3-bar reversal, maybe that's a time you can be a little more aggressive or trade with more confidence, or maybe give it some more room.
Mm-hmm.
But that's the way. And I've tried for many years to understand volume, and I just spun my wheels because when I talked volume in on the trading floor, it was literally you could hear it. So when I was in the bond room, I was in the bond options, and the bond pit would just be roaring, right? I mean, it was loud. Um, but all of a sudden, let's say there was a rally, and it's roaring, and we were moved 10, 12 ticks, right? And then it got quiet, eerily, like almost on a dime. I was like, oh, the buying stopped, and then I could sell, I could scalp a short, and it was a pretty good probability I could pick up 2, 3 ticks. Um, but how did I wasn't able to convert that into, I'm looking at the bars, but to me, in working with Coach Jay and working with VWAP, I'm like, oh, I see it a lot better, and it's helped me.
Mm.
And we look at this every day. I don't know, it's become second nature. But what I really like about it's organic structure of the market. It's true volume. It's not like it's it's live and it's true. But there was a great breakout there this morning in the S&P, much more defined. Um, let's bring up Russell, our old friend Rusty, and look at its
Okay.
first 3 minutes.
Oh, and you want to see the first 3 minutes of the Russell, okay, right?
Yeah,
Oh man, that had a nice breakout
yeah.
trade.
So we've been fun.
Okay.
I'm really becoming friendly to Rusty. Um,
Okay. Yeah, that the first 3 minutes. Do you do the close or the top, the high and low?
the high and low.
Okay, so there's the high and the low, and then you want the VWAP on there too, right?
Yeah,
Yeah, that one was just as directional.
it had the same what I call DNA.
Okay.
There was urgency. And Russell has been, when we're talking, has been lagging. If we look at the daily, it just got over the 200 moving average, where S&P and especially the NASDAQ have been above it for a month now or longer. But that one was well defined, and now I think, as we looked at the NASDAQ and we saw all-time highs, now confidence is coming into the overall market to buy equities. Russell being a broad-based index with 2,000 stocks, and it had a great move today. They came early and often. That's why this market, we're seeing the broader base participate, which to me is even more bullish.
Bullish
So
for equities.
yeah, overall, yeah,
Okay. Yeah, it looks like that's such a big move the first 3 minutes here in the Russell, and then not a lot of meat left on the bone the rest of the day, but
yeah,
that it was just directional. Like today was very very directional for like the ES and the Russell, and of course the Nasdaq has that more of those sporadic moves. But that
yeah,
VWAP opening range and the way you explained it,
yeah.
it's go ahead.
Well, remember, one of the things to remember is the public, or the larger speculative players, are trading NASDAQ, right? They're not trading Rusty as many, right?
Hmm. Right.
So when this market moves, it's most likely commercial movement,
Mm.
not,
That's
and
a
you
good
know,
point. That's a
yeah,
good point. I never think of it like that either because it's like a lot of the speculative players are usually in like the Nasdaq, maybe the ES, maybe some gold, and some of the very popular
yep,
markets. And then when markets like this, the Russell, when they start getting movements, that's not like me or you or the YouTube chat. It's
it,
institutions.
it's institutions. That's why, when you see that move, they're not playing the bid and offer. That's not a stop. That's um, buy 2,000 now at the market. Because when you're a institution and you're playing longer term, you're not, price doesn't matter. It's allocation. Like I just said, I had a time when I was in the soybean pit. Um, well, I was running a large grain operation, Farmers Commodity Corporation, and I had a large. I specialized there with bringing funds trading grains, large funds, CTAs,
Okay.
and it's not like S&Ps or bonds where there's huge volume. Well, it's localized. 100 lot means a lot more in the grains than in the S&Ps. Well, like, he
Mm.
even in the middle of the day he goes, "I need you to buy 1,000 contracts."
Wow.
And I'm like, you want to do that on a close? You would- He goes, "No, now." I'm
Just at
like,
market?
"At the market." I go, "You really?" He goes, "I'm not asking you." I'm like, he was just do it now. It was the middle of the day, and it was. I mean, I was really tentative. I'm like, "Oh, come on, man." So I did. I just started buying them, and it's hard because 1,000, I'm getting 37, 72, 102. And I got to add them up. Long story short, I'm driving the market higher by a lot, and it
Yeah.
created a stir. And it took me like 8 cents of movement. And he goes, "Okay, thank you." And what I found out later, I was talking to him. He's like, "Yeah, I wanted to see." And this is from, if you have you ever read Reminiscences of a Stock Operator?
No, I haven't.
Um, you should read that.
Okay.
It's one of the greatest books of trading, if not the greatest. Um, there's a story, and this was written at the turn of the century, um, by it's the story of Jesse Livermore, who was the preeminent trader of his time, turn of the century to the 20s. And there's a story in there when he was younger. Um, they would go, there were rumors, and they would have basically boiler shops. And then they have rumors, touts. Um, so one kid, a younger guy, comes in and he tells the big trader, his nickname was Old Turkey. He says, "You have to buy. You have to buy. Let's just say you have to buy Apple. You have to buy it." He's like, "Really?" So he gets on the phone and calls the floor and he says, "Sell 1,000 Apple." And the kid's freaking out. He goes, "No, no, you got to buy it." And then he looks at his fill. He goes, "Sell 1,000 more." And the guy's freaking out. He looks at his fills, and he sees that he got filled really easily. They absorbed his order without much movement. He turned
Well,
around and
we
goes, and then he turns around and goes, "Okay, buy 4,000." Do you want to
wow.
see? Yeah, think about that.
I mean, it wasn't that dramatic, but today in the Nasdaq, we seen a sell order come in for 500 in the Nasdaq, which is huge for that market, and it didn't touch the market. The market just ate it up, went straight through it, and then 10 points higher, 600 contracts came in, and same thing happened. Market just going up and up and up, and it didn't even slow it down, which was interesting to see.
Well, that's great information, isn't it? I
Yeah,
gotta plug my computer in here before
yeah.
I lose.
And then you guys, and typically, how long do you guys go for on at the buzzer? What do
We go
you?
for an hour.
Okay, perfect. That's what I was gonna say. I don't want to bump up on time, but we still got about 10 minutes so that we could
Yeah,
keep going over
we
this.
would
I'm
go through
enjoying
it.
this a lot. I could probably sit here and talk until slow markets, or at least listening to it.
Good. So that is one of the things in volume. When you see that kind of move, like today, maybe they could be doing something else. But when you see a 500, what you're getting information, it just gets absorbed and keeps going. That's really good information. It can absorb a large order and then move above it. It's um, so we've done the equities. What else we had? Let's look at gold.
All right.
Start with the daily.
Give me just a moment. All right, let's take a look at gold. Gold on a daily. I took a loss on gold last night.
You want to go through that?
Yeah, let's take a look at the daily. I was bullish gold, to be honest. Yeah, I could review it briefly. I'll show you what I was looking at, but we've held this 33.20s a few times, and let's see. I want to make sure I'm looking and saying the same thing correctly. So we broke through that. That was one trade, but a trade I took on slow markets. It was I ended up trying to get long at these 40s, these mid 40s, and we held it. Held it pretty well. I was looking for a nice little bit of a just nothing too crazy, just a overnight trade, looking for like mid 50s, and we did not get it. We just failed, broke down, consolidated for a couple hours, and then failed. We ran through that. I don't. It's not even a major level of support. I mean, we've seen it back here in June 24th, these 33.14s, and then we completely reversed. And I think this kind of just shows everybody. And one of the things that frustrates me, Coach Paul, is whenever a trader comes in here and says, I'm long gold because equities are going, or vice versa, or playing a correlation trade. Well, look what the NASDAQ did today, and look what gold did today. Both went straight up during the New York morning session. So as much as it sounds nice to say equities are going up, so that means gold should sell off, it's so situational. I always tell traders it depends, because you just never know. And I cannot trade correlation. I am a horrible trader when it comes to correlating these different markets. I just trade the markets that's in front of me.
That's a great. I understand what you mean. I trade different markets. I never trade them as a correlation. I trade them on their individual DNA, because everything trades different. So now that's not for everybody, and we talk a lot about you have to trade your personality. Your results really become who you are, and you have to really understand that. But I highly recommend. And you started when you're in high school. I love that.
Yeah, I I love trading. Or not so much just day trading. I just love the financial markets. I love the idea that you can make money work for you as a tool. And I was never obsessed with like the money aspect. I was obsessed, and I still am. I'm obsessed with the idea that the financial freedom and being able to buy something and it appreciates, and you don't really. I don't know if this sounds lazy to you, Coach Paul, but you don't really have to do much. Um, like if you do it correctly on the longer term aspects, and the upside potential was just like, wow, you're telling me I can make all this money and I don't have to work as hard as what I see my family members around me doing, and I could only do this. I only have to look at the markets for a few hours a day. Like that's what sold me when I was so young, and I became addicted to it, and that's where my journey began, for better or for worse. I learned the hard way.
Well, you struggled well. You have to learn how to, I'm telling you, you have to learn how to lose. At least for me, I didn't know how to lose. So, in going back into that, when you're learning, pick one thing, one contract and get a process down. One of the best traders I ever know started out in a small pit called the oat pit at the Board of Trade.
The oak pit?
Oat,
Oat.
like, yeah,
Yeah.
Quaker
Oats.
Oats.
Yeah. Okay.
The guy, the chief trader wore a big hat and had a beard. No, I'm just kidding. But the oat pit was where a daily range might be $100 in the 80s, 90s, where soybeans might be $500.
Okay.
So it's kind of different between a micro and a mini. But I'm like, I was kind of shocked. I'm like, what do you mean you started in the oats? How did you make that? How did you make that kind of money in the oats? He goes, no, I didn't. I learned how to trade
Hmm.
there because I knew if I could learn and develop my process in a market that was tame or had less volatility, I could hone my craft. He goes, from there, I moved to the corn pit. Then I went to the soybean pit. So learning your craft, you know, some people think it's an insult to trade micros. Well, if you're learning, do you want you? It's going to be you're going to have a lot of good fortune trading mini NASDAQs. I'm not saying it can't be done, but it's going to be really hard right now, especially the higher we go.
Yeah.
The bigger daily ranges.
Correct. A lot of people don't realize that though. Is as price continues to increase, the volatility kind of increases, not from a percentage basis, but from a tick to tick basis until they adjust the contracts, right? So if NASDAQ gets up to, this is just an example, and it took me a while to understand this, especially with, I discovered this in crude oil, where it's like crude oil at $50 a barrel on a day-to-day basis and its daily moves, because crude oil is $10 a tick trading a mini, and then crude oil at $100 a barrel and you're still getting $10 a tick, but the daily swings are dramatically bigger, even though in a percentage basis, say 1% of $100 versus 1% of the $50, that's double the volatility almost, or basically it is.
It
And
is.
unless they adjust the contract, like they've adjusted many times throughout, like trading, right? Where will NASDAQ, it's trading a tick is 25 cents. Will a tick be 50 cents in the future? I could see that happening if NASDAQ keeps going up and gets to like 30,000 or 40,000.
Yeah. And you hit it on. That's why I pay attention to the average true range,
Yeah,
because that is organic into the movement of the market and the cost of trading. Um,
correct.
like I said, it's different. We see that when, like you said, if you've traded crude oil, was a perfect example. It's a different market. I mean, monetarily, when it's at $100 versus $50. It probably isn't even 1-to-1 relationship. It's probably 3-to-1 relationship, because when you're $100, you can have $3, $4 swings in an hour.
Mm-hmm.
And so understanding that you want to survive when you're learning, you said, and we all go through this, is understand how to survive. I call it, you don't have to be right, you have to trade right. Well, how do you
I
learn to
like that.
trade? How do you learn to trade right? You have to be in something you can afford to trade.
Exactly.
Right?
Exactly. Yes. Yes. Yep.
If you're not, you just get run over. And what do you learn? Well,
Nothing.
uh, Well, you can learn something like I did it. But I'm not the sharpest knife in a drawer. I did it 2 or 3 times. I'm like, oh, I gotta start trading something smaller. But wisdom comes from experience, and we're here to share some of that experience and help people.
I've enjoyed it since I've been here at Topstep. I've enjoyed it. All the stories that relate and make sense of these markets to help kind of wrap your head around these different concepts of the markets where you don't really get it anywhere, right? Typically can't just watch a YouTube video or try and learn this kind of stuff in the book. It's a lot harder compared to I have actually somebody live on air. I could just ask a question, go back and forth, hop into the Discord. I've learned more than I ever would have expected to learn from being a coach here, and it's been great. The amount of knowledge that Topstep has from the coaches and everybody involved is I don't think I've ever seen that anywhere else. Like you, Hogue, Eddie, I can't even. Yeah, it's crazy. It's crazy to see that. I feel so young and so inexperienced, and trying to put that together and watching how these markets, and then also all of that plus seeing what this future and what Topstep is becoming has been. It just confirms that we're at the right place, or at least I'm at the right place. Everybody here in the chat, you really are at the right place from what my experience is and from what I've seen with all the crap in this industry.
Wow. Well, that's quite a testament, and you're right. One of the things that drew me to this is I had this idea when I left the floor is where if you watch CNBC or Bloomberg, it's an investment channel. It's not a channel with traders. Where here, you're talking to traders.
Yeah.
You're learning from traders. As soon as I heard about it and I had a chance to come as a coach, I'm like, sign me up. I think that just everything you just said, it's done from a trader's perspective.
Yep. Most of the people you see on CNBC now come from the ball pits. Everybody here, other than myself, they come from the trading pits.
Right.
Yeah. Usually it's just somebody with the pedigree and everything on CNBC talking about the news. I stopped watching CNBC. I used to watch it all the time. And I tune in. I'm like, man, there's a huge move in these markets. And then I turn on CNBC and they're talking about some random thing or interviewing some random person I've never heard of. I'm like, well, that sucks. I want to hear from somebody who's in these markets, who has skin in the game, who's talking and seeing these different markets and reacting to it real time. And I've enjoyed it.
And so I have two. And we're at time, aren't we?
Are we? Yeah, we are. We're a little bit past. So
really enjoyed it.
And then I could end it here.
Yeah. My last thing was we're going to do this again tomorrow. Bring your questions for us tomorrow for returning, and again, you get to see more of Coach Dakota at slow markets, and really enjoyed this segment today, Coach.
Me too. It's been a nice change in pace for what I'm usually used to with these markets open and the chat going crazy. To be able to sit back and have a very nice conversation with you, Coach Paul. So thanks again, and I'll see you tomorrow.
See you tomorrow. Have a great evening.
Bye.